In China, an unexpected conflict is unfolding that might catch you off guard. Let's explore the exciting world of luxury goods in China and the frenzy they're causing. We'll find out why wealthy Chinese people are fighting over Rolex watches that others don't want, and how this unexpected trend is changing the market in 2024. Stay tuned to learn the surprising reasons behind this Rolex showdown. In 2023, both mainland China and Hong Kong were the biggest buyers of Swiss watches worldwide. They spent a total of $5 billion on Swiss watches between January and October, even though China's economy was slowing down. To brace for an upcoming economic downturn, many wealthy Chinese individuals are selling off their luxurious items, especially Rolex watches and Hermes bags at significantly low prices. Despite this, the Chinese population's love for luxury goods remains steady. Because of this, people can now purchase these high-end items, such as pre-owned Rolexes, at lower costs. However, it's become somewhat of a cycle, buying today to sell tomorrow. We're aware of how Chinese consumers are quickly snapping up these unwanted Rolexes, flooding the market, all at favorable prices. While the rest of the world is adapting to life post-pandemic, China has been facing some challenges. Affluent Chinese individuals are selling their used Rolex watches to quickly obtain cash, causing a notable decline in the prices of pre-owned luxury items over the past few months. This downturn is causing issues for the luxury goods market. Since March 2020, when Shanghai, a major financial and commercial hub in China, imposed strict COVID-19 prevention measures, the value of many popular luxury watch and bag brands in the secondhand market has plummeted by 20% to 50%. These regulations in Shanghai and other areas have disproportionately impacted small business owners. Many had accumulated significant inventories of luxury items during prosperous times, but now find themselves with reduced funds due to lockdowns. As 2023 ended, there's a lingering question about how the Greater China watch market will evolve in 2024. In October 20th, 2023, a report by Deloitte on the Swiss watch industry, it was suggested that the future of China's watch market is uncertain and could go in either direction. The report gathered insights from senior executives in the Swiss watch industry, and it was revealed that 51% of them foresee either a continued decline or a period of no significant change in 2024. On the other hand, the remaining 49% are optimistic and anticipate growth. But if we look back at last year's figures, we can see that since March, the price of used Rolex Submariners has plummeted by a whopping 46%, almost half off. This drop in value was reported by Watchco. And it's not just watches. Even classic items like the Hermes Birkin bag have seen their prices decrease by as much as 20% at luxury bag shops in Shanghai and Hangzhou. But here's something interesting. Pawn shops and other businesses that sell luxury items have been thriving. Why? Well, it turns out that many business owners who needed cash have been selling their luxury items. They might be looking to pay off debts or expand their businesses. And yes, pawn shops do sell expensive items too. Let me introduce you to James Wang, a seller of second-hand luxury watches in Nanjing. At the beginning of 2023, he didn't buy any Patek Philippe watches but purchased 5 Rolex Submariners from people in need of cash. However, something surprising happened in July. He acquired 6 Patek Philippe watches and a staggering 29 Rolex Submariners from individuals facing financial difficulties. James explains that although Patek Philippe watches are traditionally meant to be cherished and passed down through generations, rough times sometimes lead people to part ways with them. Before Shanghai experienced its lockdown, the value of used Rolex Submariners skyrocketed by an incredible 240% in just 6 months. Dealerships in Shanghai and Hangzhou, which had previously raised their prices, are now lowering them due to the shifting market. It seems like the prosperous times might be coming to an end, and business owners are understandably cautious, considering the looming economic correction. An investor in watches, who also operates a business selling electric heaters in the city of Wuxi in eastern China, made an interesting observation. He noted that recent price increases in the luxury goods market were mostly due to speculation rather than solid reasons. He's right. Such price surges are unsustainable because they lack a solid foundation. This shift in the market is significant for China's luxury goods industry, which is valued at a staggering $74 billion. However, when it comes to the second-hand luxury goods market, China has been lagging behind countries like the United States and Japan. Ju Tainiki, based in Shanghai, has capitalized on the economic slowdown caused by the coronavirus by creating a marketplace for second-hand luxury goods. He's expanding his business to new locations because more and more people are selling luxury items like Hermes Birkin bags and Rolex watches to make ends meet. Ju, a former venture capitalist, has observed this trend, noting that people are realizing they can sell their fancy belongings to earn much-needed money. Ju stated, "To make ends meet, which means to cover your basic expenses, more and more individuals are now aware that they may sell expensive products for some money." As a result, the number of people selling items through Ju's platform has increased by over 40% compared to the same period last year. The site now boasts 12 million users, and they're expected to trade around 5 million high-end items this year alone. This shift signals a significant change in China's luxury goods industry, indicating that the second-hand luxury market is gaining importance, despite previously being smaller than in other countries. The changing luxury goods market in China could have significant effects on the world's largest luxury goods producers. These major players have been concentrating heavily on the Chinese market, but they're now experiencing slower sales there. The increasing interest in second-hand luxury goods in China is prompting some brands to reconsider their strategies. They're beginning to think about how they can get involved in this resale market and what role they should play in it. Here's the exciting part. A market research firm predicted at the end of last year that China's second-hand luxury goods industry could reach a whopping $30 billion by 2025, a massive increase from the estimated $8 billion in 2020. While there are no new projections for this year, it's evident that this market is on the rise and capturing the attention of many. For example, Ju has ambitious expansion plans. His company, which started as a digital marketplace in 2016, is now opening physical stores in cities like Shanghai and Chengdu. They're also seeking more retail space in Beijing, Guangzhou, and Shenzhen. Other popular alternatives like Feiyu, Ponhu, and Plum are also gaining traction. They're enhancing their authentication processes to reach more consumers, and sometimes even transitioning from online only to both online and offline models. These companies attracted tens of millions of dollars in venture capital funding in 2020 and 2021. Analysts anticipate that domestic companies will continue to lead China's luxury resale industry in the near future. Global retailers like Vestiaire Collective and The Real Real have yet to enter the mainland China market and have indicated that they don't plan to do so soon. Predicting clashes among Chinese shoppers over unwanted Rolex watches could arise from several factors coming together. In the luxury goods realm, especially in regions like China, where demand for prestigious items such as Rolex watches is high, clashes might occur due to shifting trends, limited supply, and evolving consumer behavior. That wraps up our video for today. Feel free to share your thoughts about this video in the comments below. For more videos like this, remember to like and subscribe to Luxury Focus. Thanks for watching and see you next time.